right. What's going on, everybody? Oh, man, I lost him there for a minute. I didn't have you there, Tillman. Chris Franks with TexasWest Capital. Andrew and Tillman here from Arch Public. Joining you all today for, as usual on Wednesdays, Beards in Bitcoin. We're excited to have you all with us. We've got things to talk about as always. But before we do us a favor. Hit the thumbs up, hit the like, guys. Subscribe, follow, share the link. Share the link. I think we do a really damn good show here. And we try to have a lot of fun when we're doing it. So hopefully that gets y'all going as well. So share the link.
There's something really important that we need to cover as we start the show here today. It's very important.
Very important.
I know both of you guys are going to be thrilled about it. Okay. BitBoy has returned. Okay?
What?
BitBoy has returned.
He got out of jail?
He a few minutes, maybe 10 minutes ago, I was watching his live stream. Now, to be fair, he seemed a bit sedated, if I'm going to be honest. And he looked like he was being held in an undisclosed location. But it seems that BitBoy is back. And, you know,
I'm here for it. Tell him to open up an X channel. Uh-oh.
Hey, what's going on there, Tillman?
I posted several weeks ago, and it was just from the heart. It was just one sentence. I miss BitBoy.
And you think that's what got him back? Is that what you're trying to tell us here, Andrew?
I don't know. It's just, you know, he has a special place in crypto Twitter's heart. Let's just put it that way.
Okay, now that we've got that out of the way, I just noticed, and hopefully everybody else is noticing, Andrew is known as the Turbo Maximalist today, and Tillman is known as I give up with these guys. You know, it's like having your 3-year-old with you. There's absolutely nothing you can do to stop them from saying the things they're going to say. You do the things they're going to do, y'all. I try. I do my best, okay? I have no control over it.
Listen, why set your sights so low, Chris? Listen, CEO of the moon sounds a lot better than TexasWest Capital. So, I mean,
hey, the Mars sounds better than the moon. Just saying, like, you want to reach, you want to go further.
Tillman's like Vector on Despicable Me, the first one. You know?
I haven't seen it.
Vector. No, I am thrilled that BitBoy is back with us. It's been a long journey for him. There've been some moments. I'm glad he's back. I'm glad he's, you know, hanging tough. And again,
do you remember the beginning of BitBoy? How convincing he was, though. He had the whole office set up.
I mean, he had a whole thing. He had a whole deal, man. He did really well for himself, and then he's like, you know what? Life isn't as interesting as I want it to be. I'm going to hit the nuke button.
I think it's you know, the age-old Eucharist. Like, you get fame fame is different than money. You know, it's a different skill set to manage being famous, and he definitely was famous.
Well, we aren't, so I guess we don't have to worry about that too much, which is probably a good thing. You know.
Oh,
Andrew gets on us about talking about XRP, and yet he loves talking about BitBoy.
Listen, here's the thing.
Kettle black.
It was said somewhere today that how in the world does Arch Public have more followers than I do? Okay, that was I heard that from, I believe I heard that from Moonboy today. He's like, how does our company have more followers than I do? What's going on out there?
Listen, it's like I've been shadow banned or something. I've got too many hot takes.
Wait. I thought you didn't want followers because it brought in all the other stuff that you didn't want to deal with.
I wasn't saying that as a desirous statement. I was saying that as a factual data point that I was taking notice of. There's a very big distinction and difference.
Data point.
Well, listen, the universe is a fascinating place. You got to make sense of it. You got to plot the data.
Try to anyway, right? Hey, listen. So everybody's complaining. Everybody's, oh my God. I tell you guys, I can't handle it. Everybody and their grandmother, again, the top is in. I mean, they're talking about the cycle top. We have a series of higher highs and higher lows on the larger time frame that you have to watch, because we're talking about years of a cycle here, we have not even punctured the last high or low, and people are telling everybody that the top's in.
The fact, well, there's a lot of assumptions in that statement. Let's talk about it. Number one, cycle. That word is an assumption. You're presuming that this cycle is the same as last cycle by even saying that, which is a faulty notion. Like, you cannot assume or presume the market is going to respond like history. It often rhymes, but it's not an exact predictor. And these charts and these people, influencers that overlay two charts and they look perfect, that's magic. That's fake. That's I can take any two charts and adjust the scale and the log, and I can adjust the time frame, and I can make them look identical. Almost any two charts that are in an upward trajectory. So it doesn't mean anything. You have to again, there's just a lot of hocus pocus and noise and congestion in the market. And about the price, it wouldn't surprise me if we swept through 100.
Yeah.
What do you think the mentality of everybody would be if we hit 96?
Oh, you thought they were saying the top's in now? Oh man, peak losing their damn mind is what that would be.
Well, I'll tell you what I think would happen. I think a bunch of short positions would open up, and I think people would think it was going to 75. And I think those are exactly the market conditions that it's built to shake you out. It's built to make you wrong. And so if you feel like the top's in, you should probably look at what the opposite of that feeling looks like, and try that shoe on and see if it is what's the probability of that outcome versus the outcome of the cycle top being in. Cycle top being in, the least we've ever done in a bull run is 8x. I don't think we'll do an 8x this bull run. What does that mean, though? I think we're going to do a hell of a lot more than a 2x, and that's where we sit today. So, between 2 and 8x,
but 8x, I mean, we were 15 and a half. So 8x, you're looking I think we've hit 8x already at 120 and some change.
How do you figure? From 75 high top?
Oh, not from 70. Oh, you mean from the previous high?
Yeah, I mean, where we're measuring from, we're measuring expansion from the previous top. Okay. 75 to what? You know what I mean? Gotcha. And 75 to 120, that's a bull run. That's not. Right. That's nothing. That's the part of the retest of the breakout, honestly. Yeah. So in my opinion, is there 2 or 3x left on this train before we see major, systemic year-long corrections? I think that way. But again, that's why the markets are the markets. Nobody knows. And you just have to be prudent in the way you scale capital in and out of them. That's the way you win.
Oh, so you mean risk management? Because
yes.
The only thing you control is how much you lose.
Well, you lose me at the only thing. That's it is one thing, I pointed out, I'll give you a riddle. Riddle me this, okay? I can't control how much hair I lose, number one. And here's another riddle of life that I found out this morning. The shorter I cut my hair, the less bald I look. Now, there's one for the ages, okay? Put that in your book. Andrew, are we boring you? Do you want to get off the show? Do you want to unsubscribe at this point?
Go follow, go watch Big Boy or something.
You didn't mention my new shaved hair, and I'm offended because I typically have a lot more prominent male pattern baldness that you can see.
It's what's interesting is, I often will say, don't get bored with Bitcoin. And in a lot of ways, a little bit to the downside, people are, bored with Bitcoin. It's not doing enough for them. It's the, ongoing meme that pops up in crypto Twitter. It's the funny looking guy with the stick saying, do something, right? Like, do something. And I just think that we're on the cusp of, it's fall. We're going to have renewed interest across all markets. We're effectively at new all-time highs, or just a couple ticks away for new all-time highs on the S&P. There's going to continue to be asset allocation across all assets. But interestingly enough, the assets that will get additional allocation are going to be Bitcoin and then overall crypto ETF. So if you're at Bitcoin and Ethereum, you're going to see additional allocation there that will push Bitcoin to new levels. It just will. Now, whether or not we see 150 or 200 or 300, by the end of the year, that's a different discussion. Do we find ourselves in the 130s, over the next 90 days? I'd guess yes. So, does that bore people on crypto Twitter? Yes, it does. They're always looking for the next degenerate gambling game to play. Starting the show today with BitBoy's return is sort of emblematic of that. So it's finding ways to program yourself to understand that Bitcoin as an asset class in and of itself is just extraordinarily powerful. If you're going to choose to at times find yourself getting bored with the asset, then you've got to go and get another hobby, because there will be times, and there's often been times where Bitcoin does a whole lot of nothing for extended periods of time, and then in a flash it pops to a new level and it stays at that level. And certainly this quote unquote cycle, don't love the word cycle, but over the past 12 months, over the past 18 months, there's just a new paradigm. And when there's that pop to the new level, let's call it 130 and change, it has a hard time going back down 35%. It really does. We were at 123 and we popped down to 109, right? And it has a hard time staying down at 109. We, pop up to 112 over the last 24 hours. As much commentary as there is out there about this is the top, well, where's the bottom? The bottom seems to be fairly high as well. The bottom is very, very high. So, what are we talking about here? Should we be talking about the top? Should we be talking about the floor that's extraordinarily high, or the top that people doesn't think is high enough?
But again, the assumption is the top on what timetable. They're assuming, and they're pushing a narrative that we're on the same timetable that the previous cycles have been on. Yeah. It's a faulty assumption at the very foundational level of the argument. So it doesn't matter. But there are some good questions and some things in here in the comments. What if Bitcoin price stops when it reaches reserve currency status? Reserve currency is not going to be Bitcoin, in my opinion, my humble opinion. Bitcoin is going to be, and this is a huge place in the financial system, especially in America. It will be the second lendable or collateral that's accepted by banks for everyday loans. And there will be a central flow up to a Fannie Mae or Freddie of some sorts that will allow every local bank to lend on the back of Bitcoin. I do believe that. And so you talk about the accessibility to Bitcoin, it's going to go up. The integration to the financial network is going to go up. But to think that Bitcoin is going to be money, it doesn't work like that. You can't use it like that. It's not built to do that. That would be like you saying, hey, let's order a Tesla and let's put 20 people in it. Doesn't work. You can't fit 20 people in it. So Bitcoin's not built for that purpose. It's built as a hard asset, as a hedge against inflation, as something that monitors and reports on global inflation better than any indicator we've ever created. And it's extremely easy to repossess in the event of a default, which makes it extremely attractive for banks to use it as collateral and as and exchanges to use it as collateral. No different than the exchanges that are going to be using other coins as collateral. Ripple's exchange undoubtedly will have XRP being used as some form of collateral in their exchange, liquidity pools. So it's just it's the new financial network. And Bitcoin happens to be the hardest of all of the assets in the new system. So it's going to have a lot more derivative products built off of it because the stability's there. And quite frankly, the data curve over a 16-year period, that's a long enough time to observe something and build models off of it. That's enough data.
Yeah.
There's a comment in the comments here. It says, did the Dutch have live streams back during the Tulip Mania? Now, I don't know what direction that guy's going. If there's, thought process around, we being in Bitcoin is Tulip Mania. Like, that narrative is so long gone. It's comical, honestly.
Well, he's the previous comment tells you what the motive is. It says, riddle me this: banking cartels don't share power. I couldn't agree more. That's why they've been slow to adopt this. And that's the reason why they're adopting it now, is not to replace the mechanism that they use for power, which is money. And that's what, federally backed and or institutional or federally issued, state issued stable coins are going to come in, ultimately leading to the big, bad, scary CBDC. That's inevitable. I can't see a future 100 years from now where our money, paper money, hasn't been replaced by a central bank digital currency. Like, it just doesn't make any sense not to. But the timeline of when that happens is your and I's best guess. But this narrative that the banking cartels are threatened by Bitcoin, that's not what people are building huge empires of liquidity against. They're not threatened by it. They're using it. They're using it to extract money from the people in the form of fees. And the demand by the people for this asset is what's driving it to its prominence, nothing else. If there was no demand behind it, they wouldn't care. And they only are here to essentially maintain, like you said, that control, that power. And there's nothing that Bitcoin's going to do. Bitcoin can't be money for everybody. I hate to break it to you. Try buying Bitcoin. I will tell you this. The main reason why I liked XRP when I first found it was because it had the closest resemblance to money that I'd ever seen in blockchain. Instant, almost settlement, very low transactional fees, like proof of work. And the beauty of Bitcoin does not lend itself to buying a cup of coffee with it very easily. It's a 10-minute settlement time period for each block by definition. Like that, the protocol actually works itself back to 10 minutes if it's lower or higher than that, by increasing or decreasing the difficulty of the number that all the miners are trying to guess. You add a digit to that number, it becomes infinitely more hard to guess. You add 2 digits, more difficult. 3 digits, more difficult. And if it's too easy, they're going to increase the difficulty. And too easy means blocks are settling less than 10 minutes. So that's the protocol. That's how it's built. So I just disagree, like you said, Andrew, with the narrative that this is being resisted at any level. Larry Fink is the head of that snake, if you will. And he's adopting it, not only Bitcoin, but pretty much the entire crypto sphere.
Yeah. When you're at a point where JP Morgan says that they're going to lend against crypto at some point in the near future, they're doing deals with Coinbase. BlackRock's biggest and most successful product launch in the history of that company is their Bitcoin ETF. We have a slew of crypto ETFs coming to market September and October. There's in the words of Lynn Alden, there's no stopping this train. It's left the station a long time ago. And again, having the capital associated with Bitcoin now across just a few of the organizations that I just mentioned, that scale again puts a floor associated with the price of Bitcoin at a number that global institutions have probably gotten very comfortable with at this point.
Well,
right?
Let's play out both scenarios live. I mean, it's just an easy binary output. Let's say we're wrong. Okay. Let's say Bitcoin goes to 0. And let's say you are allocated to between 5 and 15% of your total liquid available investable cash in that. So you've lost 15% of your portfolio.
Mm-hmm.
Not good. We'd all be crying together going, oh man, that tulip Bitcoin, man, that sucked. But 15% at the most. What if we're right? That 15% will outperform your 85% every day, all day, for the rest of your life, your kids' lives, your grandkids' lives, your great-grandkids' lives.
Mm-hmm.
And no one can ever take it from you, tax you for it, keep you from using it, keep you from storing more. So if we're wrong, you take a hit. If we're right, it changes your life. Okay, well, those sound like pretty good risk-reward ratios to me. And I think that's what people miss is like, no one's saying to go 90% into Bitcoin. Those days, you can do that. And, it may pay off in spades, but you also may be the bearer of bad news to your wife and kids when Bitcoin, does go down a lot. So you have to determine for yourself where you are in life and what risks you have to take or you're willing to take based upon what your goals are. And my point would be is show me another asset that has more potential with less risk if properly allocated. I don't know of one.
Yeah. Yeah. No. Yeah. I mean, Mr. Smith, you were saying, just say, what did he say? I said, I'm not busting your balls. I'm just trying to see the unforeseen fall of empires always leaves masses of people in shambles, and no one can tell when it's coming since 1913.
I couldn't agree more with that, but you got to
yeah.
ride the roller coaster that you're living in. You know what I mean? Like you got to put your money somewhere. How are you going to allocate it if you're afraid to? And if by that thesis, you shouldn't invest in anything, period.
Scared money makes no money, right?
Well, I mean, we're in a position right now, and this has been the case, the great financial crisis. We're almost to a point where, philosophically or even theoretically, recessions don't really happen. Meaningful corrections or bear markets don't really happen. Again, just in the past, 6 months, we had Liberation Day where we tariffed everybody at like 77% or some crazy number. And then we bombed Iran and we're at all-time highs just a few months later. Like the resiliency of the markets is buttressed by this one thing, and that's called the American consumer / American investor. American investors never stop putting money into the market because that's how they've been trained. They never stop buying stuff because that's how they've been trained. And they never sell their investments because, one, that's how they've been trained, and they can borrow against those investments to consume more. That is the ultimate flywheel associated with when's the next time that markets are going down 40%? You tell me. What has to happen? I don't know. Right? Like Ukraine and Russia, that's still going on. We bombed Iran, Israel at war with darn near half the world. What is it? What has to happen for there to be a, fly by the seat of your pants type of correction / downturn? It's hard to figure that out. Right.
And in all of that, I mean, stateside here, we've got inflation. Inflation's still there, right? I mean, still hasn't got down to the 2%. And so,
inflation happened, 2000, 2021, 2022. Even while inflation was happening, markets still doing this, right?
Exactly.
You can scare yourself with inflation, scare yourself with bombs, scare yourself with whatever it happens to be. Markets go higher. Right. I'm reminded of everybody's favorite stock market pundit, Dave Portnoy. Remember one of his streams, it was famous. He's like, the market never goes down. This stuff never goes down. And for all intents and purposes, on a 6 month by 6 month, look back, he's effectively right. It's very difficult to find space where we correct to the tune of 30, 40, 50%, even across Bitcoin, I mean, it's hard to see it again because Bitcoin has become part of that flywheel that I just described, which is consumerism, investing, never selling, borrowing against so you can consume more. I mean, it's become part of that process, right?
Is that your phone?
Yeah, that is my phone. Somebody in our company is calling me on Slack. That's correct. I
Tell
should
them
change
from
my title to Slack Maximalist at this point.
But yeah, so again, so we go through here, and I mean, I think those are really important points to bring up because, again, at the end of the day, all this stuff's happening. We've talked about it so many times before, which historically would have led to a big pullback in the markets or some kind of something or other there. And now he's going to go off while I'm talking to him. So okay then. But anyway,
what if the charts that we look at are just a measurement of caught inflationary dollars, right? Because to me, we think it's like perspective is everything, right? Yeah. If you look at how much money's been printed in our lifetime and the escalation curve that we're on, we'd be idiots to not think everything would go up in price. Everything. So the question becomes is what catches more of the everything? But you almost can't miss. No different than if you ask your parents, and just like I've asked mine, we were at the lake and they have a house that's been in my wife's family for a very long time. And they were saying, we bought this house for like $30,000, 1953. What do you think we're going to be saying 40 years from now? Do you think we're going to look at the houses around? They're going to be the same prices or even remotely close to what they are today? There's not a chance in hell. Not a chance in hell. Why? Because they're going to print a ton of money between now and then. And I mean a ton. And that money has to go somewhere. And it filters down so that every time it changes hands, it can be taxed. That's a good economy. Our economy is built on the fact that money flowing is being taxed infinity times. It never stops being taxed. I buy your goods. I've paid taxes on that money. Now you have to now pay taxes on that money because it's income to you. And then you pay your employees and they have to pay taxes on it because it's income to them. And then they buy something at Walmart and Walmart has to pay taxes on it because it's income to them. That's how it's built, guys. And so how do you make an economy grow when every dollar is constantly losing itself? You print more dollars. That's the only answer to the riddle. And so if you think that money is going to keep getting printed, you then have to ask yourself, okay, which assets are going to catch more of the money than the other assets? And so, some of the more speculative stuff, risk on assets, are going to be natural collection pools for that. And you're going to see these massive runs, but it's not going to have a lot of staying power. Bitcoin, I think, has gotten to the maturity level where whatever it captures, to Andrew's point, becomes staying power. And that floor becomes just ratcheted up one more level. And, we could be proven wrong. We could see a 50% drop. I doubt we will. I would bet against it, and I am betting against it. And so you have to determine where you believe the value of Bitcoin is. But I can tell you this. I've been in Bitcoin for more than a decade, for 12 plus years. And I've said the same thing that you're saying to yourself 1,000 times. I'm going to wait until, how many times I told myself after it dropped down to 3,000 and I was like, well, it's going to at least go back down to 4,000 or 5,000 and I'll get much more. No, it didn't ever come back down. When it touched and you lost that opportunity and it was gone forever. So if you're thinking that you're going to smash buy in and smash buy out based upon your crystal ball, we want to watch because we know where the plane inevitably ends up in the ground. And you can talk to James Wynn if you don't believe me. He showed that you can do miracle type stuff with being right 4 or 5 times in a row with high leverage. But inevitably, you can't keep playing that game.
It'll catch up.
Yeah, well, it's like playing Russian roulette and spinning it more than 6 times. You could do it, but I wouldn't suggest it.
I wouldn't suggest spinning it 6 times. I'm just saying, you know.
Yeah, I mean, with every spin, you increase the odds of catastrophe, right?
Yeah. But and then that's the thing, you know, when we're looking at this and we're kind of looking at, okay, where are things going? I mean, you can't sit here and just kind of, you know, just go off of what these large accounts on social media are saying. Hopefully people are noticing that most of the time they're wrong, and they're wrong spectacularly. They're not even like wrong a little bit. They're wrong spectacularly. Because a lot of it's just rehashing a bunch of stuff that's never really been true, but continues to be parroted in markets forever, right? The same nonsense I saw when I first came in, 30 years ago, and I thought, man, yeah, that makes sense. And then since then, I haven't really seen it work out. I've seen it a lot of times start, and then it doesn't work out. And
Chris, I used to watch Mad Money to get tips.
Man, this wasn't supposed to be a Jim Cramer bashing show here.
I didn't say his name. You did. I just said I used to watch Mad Money thinking this is the hot take in town. And, time will teach you differently. By the time it reaches there, you're the exit liquidity. That's the reality of the markets. By the end.
Well, what's interesting about that, this is, a little bit of a background to that, all of that, right? So obviously Jim Cramer was a wildly successful hedge fund manager.
Yeah.
So think about that. He's a hedge fund guy looking for literal seconds worth of edge all over the place as a hedge fund guy. And then he, is hosting a show where he knows that there are thousands of hedge funds across the country that he competed with that are gobbling up that edge before it ever gets to him, before it ever gets a half an hour later, certainly before it gets to 6 p.m. each night after the markets have closed. Like, dude, ridiculous, right?
I think he sold his soul to entertainment, and that's okay, right? Mm-hmm. Because the horn honking and all the antics that he injected into trading was his shtick. It made him who he was in his early years.
I can't do that here then?
Huh?
I was going to start doing that. So I shouldn't do that now?
I will unsubscribe. That is it. But it's just like anything. And Andrew, we talked about some of the influencers that we know that have had extremely successful careers in the real world, and then they have a little bit of taste of fame, and they change all of their rules, and they basically become a different person. I don't think they talk and they even represent what they did in their previous careers. And I'd say Jim's probably the same type of a thing. I mean, it's a totally different skill set, right? You got to be on air and be entertaining people versus
again, I don't
moving
know
in
Jim,
silence.
And it's funny that he's the counter indicator, across crypto Twitter in a lot of ways. But his book, Confessions of a Street Addict, is an awesome book.
It really is.
It is a really, really good read. You'll get into, if you are interested in finance, you'll read it in a day because you can't put it down. I mean, it's that good of a book. His other books are stupid. They're just paperback versions of a show. But that book is really, really good.
Well, and he may have, through his fame, created the problem, right? Because if you become very popular and you become a voice for retail, and the institutions know that large liquidity follows what you say, and they get access to what you say too, it's easy for them to play the counter trade and push it. That's easy money is the point. And so he may have actually inadvertently created the problem of the counter trade to him just based upon how famous he is and how many, I hate to say this, but I'm one of those, so I can. How many dumb money people are out there just going, oh, Jim said to do this and I do. Well, institutions are on the other side of that, knowing that I'm going to do that. When you know where money's going before it goes there, you can make money on that. And that's what they do. That's the primary objective. By the way, Fibo is on fire down there. He said a few really great comments. But he is exactly right. I think the best comment he's written is that Bitcoin is the first asset to flip the script on savings and really, if you just look at Bitcoin as a money market account, do we have so much disappointment to endure before we get to money market rates? Yeah. So you're complaining about 30% plus returns, 79% average returns over a 16-year period. Yet we all have money in banks that are paying us 0.08% interest rate. So if you just took what you would consider your emergency fund that's sitting in a low interest bearing account and you put it in Bitcoin, wait a year and see if you're not wildly happier with what your returns are in that savings account. And to Fibo's point is like, there hasn't been an asset that's been available to the people that have given you that consistent of a savings trajectory ever. I don't know of one. Gold used to be that way, but gold's price, all the upside's been stripped out of it through manipulative paper trading. So there's no real upside left until this last couple of years, until this last year, really.
Well, old Schiff is talking now about how tokenized gold is going to eat Bitcoin's lunch, basically. Have y'all seen that tweet?
Which I don't even understand, because it's still possessed. Like, okay, let's play it out. Gold is sitting in a vault somewhere. There's a token that's issued that says that I own that. Isn't that just the dollar?
Yeah. Schiff isn't serious. I mean, he's simply doing anything he can to prop up his own business, talk his own book, get people interested in gold, get people to reach out to, and be involved in his Euro Pacific whatever fund, and to buy something from him associated with gold. Good for him. He's found a little niche where he can be anti-Bitcoin, which brings a lot of eyeballs, which brings out a lot of gold bugs, and then maybe he can sell them something. Simple as that.
But imagine how difficult that's got to be today for him against Bitcoin as it was prior to Bitcoin. I mean, prior to Bitcoin, gold was the thing, right? That was what you did.
Yeah.
I mean, it's got to be tough for him now.
Chris, I don't think you'll ever get out of man the desire to own gold. If you've ever held a gold coin, an American Eagle, 100% or 999, whatever percent.
Yeah.
There's something about it. It's ancient. It's like fight or flight. It's instinctive. It's inside of us all. So I don't think you're ever going to get rid of gold. I just think, to Fibo's point, it's a much smaller percentage now, right? And Bitcoin becomes something that is unignorable from an upside perspective. And the people who even dabble in it and put their toe in it wait 5-10 years, and it's absolutely astronomical. And I'm going to give you an example of that. I know people, and won't name names, but got into Bitcoin early and barely got in. Okay. And then I know guys that got in early and got in over their skis in the deep end, right? The people who ended up with more money are the people who dabbled in it. Why? The people that got over their skis got shaken out at some point. It was a nasty roller coaster when you were 80% committed and had any real world responsibilities. So nobody could sustain that, or very few people could sustain that. Whereas the guys that got in modestly, back then, modestly was 500 Bitcoin. Well, where are they now? Well, 500 Bitcoin. I know some programmers that are sitting on 100 Bitcoin and they're done. They never have to work again. And it wasn't like they bet their ranch on it back then. They may have taken 2 or 3 jobs payment in Bitcoin and just sat on it because it was nothing to them. They chalked it up as nothing. They left it as nothing. And they had the duration, the longevity to make it to now. So, it's the tortoise and the hare story. So no one is on this call, and no one is on, anybody that's prudent is telling you to go ape in your life savings into Bitcoin right now.
Yeah.
God only knows where the price is going to go, but you have to legitimize your thought process and treat it with the respect that it deserves. To Andrew's point, it's way beyond like, is this a Ponzi scheme? I mean, are you kidding me? It's integrated into Wall Street. So even if it was, they'd make it work, because Ponzi schemes only fail when the money stops, and the guys who print the dollars, the money never stops.
Once we get to ETF level, Bitcoin and Ethereum, but there's, worst case scenario for Bitcoin and Ethereum as assets and then as ETFs is turn into middling performance type of gold and silver ETFs. That's worst case scenario. Worst case. And people still hold that stuff in their portfolios. So anything above and beyond that is extraordinary performance. And so,
well, I would argue it can't be like gold and silver. And here's why. Because every year technology creates more mining reserves and more accessible gold and silver out of the ground. Every year in Bitcoin creates the opposite effect. So they're going to separate from themselves and always be expanding in that separation. It's like the ever expanding universe. Because 150 years from now, there will be less Bitcoin than there is today, believe it or not, because people will lose it between now and then. You can't imagine how scarce this is going to become, if humanity survives 1,000 years from now, right?
Well, I mean, just look at how many's already been lost, now, the biggest story probably being that old boy over there in the UK who threw his hard drive out or something in the land, the landfill, and has spent the last like 11 or 12 years looking for it supposedly or whatever. I mean, I don't know how much is actually lost, but I think it's somewhere like, was it like 3 million, 3 to 3.5, 4 million maybe?
I didn't hear about it. I didn't know.
They can't get to it.
Yeah, that's a lot.
That's significant out of a 21 million, total. I mean, that's it's kind of ridiculous. And going forward, it's just going to continue. Now, I think the one saving grace from that, and it's the one thing that people are going to hate to hear if they're Bitcoin maximalists, is what we've talked about often, which is, they're going to make it so that you're not going to own everything and you're going to like it, right? So you're not going to end up owning Bitcoin, right? You're going to put it into whatever bank, and they're going to have the control over it versus you. And maybe in that way we can lessen the amount of Bitcoin that's lost, in future generations. But
well, here's a hot take that most people don't want to hear, but I believe it to be absolutely the truth. Bitcoin will lose number one spot very shortly. A stable coin will take that spot almost inevitably, because stablecoin's adoption and the vehicle of a stablecoin allows for it. It's not speculative. It's just a liquidity pool. And the deeper the liquidity pool, the more fees they make. Andrew's got, he's enamored with Tether and how much money they just print out of thin air. And I agree. I mean, it is something to behold. And so when the government that's the closest thing to a central bank that we have in crypto. So when the state of Wyoming issues a token that's a stable coin, which they have, that's going to eventually be looked at as a very stable place to put your money. And if the state incentivizes you to put your money there through tax deductions and other things, it's just the pool is going to grow and grow. And eventually, very shortly, I think that we'll see a stable coin go up into the $10 trillion market cap range. I think it's inevitable. And
that ends up being good for the dollar, because
absolutely
holding treasuries, right? Everybody's like, everybody's talking about, China, Japan, they're unloading. Guys, Japan owns trillions of dollars in treasuries. They've sold what, 20 billion, Andrew, in the last quarter or whatever. And so, I mean, really, it's a drop in the bucket at this point. But you know, if that's something that you're concerned about, or your reasoning for why the dollar is going to I can't even say the word because it's so stupid. But anyway, I think it's a bunch of nonsense, especially when you look at, while still small, the amount of treasuries that stablecoins hold currently. The fact that so much effort is being put into stablecoins and stablecoin legislation. I mean, like Tillman's saying, it's inevitable that money's going to flow there. And as that money flows there, they're going to do what they've been doing, which is buy that U.S. Treasury for their holdings there. So, I mean, you know, again, the end of the dollar is not coming anytime soon, guys.
Did you see the comment from the Monero? I have lost my faith in Bitcoin. That's rich. That's rich coming from a protocol that had a 51% of brute force attack successfully pulled on it in the last 3 weeks.
What was that, Qubit or something that did that?
Qubit did it. Yeah.
Man, I've been in crypto long enough to remember when Monero was the thing, right? We were talking about privacy and
listen, I've met the Monero team. They're top notch guys, and I mean they've done it right. And layer one privacy coins will be a thing, but it won't be a thing that's allowed to be issued from institutions. It'll have to be from a government. But Monero's tech is as good as it gets, in my opinion. It just is too close to the line of state-issued black hole funds. You know.
I'll always default to follow the black brick road, right? Black brick road.
Black rock brick road is that what
you're talking about? So what BlackRock's doing and how they've laid the groundwork and the protocols that they're using, you know, you probably should at minimum keep an eye on those protocols. You know, I think USDC and Tether will continue to be, you know, enormous. I agree with Tillman that at some point, you know, Tether has 400 million users, guys. 400 million.
And how many employees?
How many what?
And how many employees?
Like 50. Like 55 people. It's the leanest company you've ever seen. And listen, people have shown up at their offices. Of the 55 employees, no one works there. It's just an empty office. They all work from home. It's amazing.
So it's there will be a moment where, in terms of market cap, you know, there will be something that overtakes a Bitcoin ostensibly. I think that over the next 15 years, we go from $4 trillion market cap in terms of crypto to 50 trillion. And so again, if you think that we approach that in any way, shape, or form, you know, that is anywhere from 7 to 10x of where we are now. And you know, unless you're 74 years old, and you probably shouldn't be investing on 15-year horizons, you probably should make some level of a commitment to the space. There's the somewhat risk-adjusted way, which is, you know, put some money in Bitcoin and Ethereum ETFs. There are other risk-adjusted ways, while, you know, Bitcoin and Ethereum on a spot basis on crypto exchanges, and then you choose some other projects that you think you like. I'll give you an idea. I have followed a company, and Tillman knows this, for years in crypto called Numerai. It is their token Numeraire, NMR, has been something that has real utility inside of their story. They're an AI-focused hedge fund and have been for 7 years out in San Francisco. And what they do is they run a contest every day. And so scientists, economists, market folks will, quote unquote, stake their Numerai token associated with their best idea for that day associated with markets. The hedge fund then collects all that data and then takes positions based on where the data goes. And the hedge fund obviously is wildly outperformed. I think yesterday or the day before, it was announced that JP Morgan had taken a $500 million stake in Numerai. in their technology and their AI-driven hedge fund principles.
Well, they've been working in the background for 6+ years. Their technology's great. Again, it's like right place, right time. It would not surprise me, Andrew. You have been talking about them from the very beginning. And when utility is allowed to be adopted, there's amazing things that can take place. And I couldn't agree more.
Yeah. So we're in a spot right now where the regulatory environment allows for these things to happen for traditional players to really dig in on innovation and say, we're going to invest here, or we're going to buy this, or we're going to acquire this, or we're going to do this, but we need these companies to join with us and partner with us. Coinbase and JP Morgan and Coinbase, JP Morgan and New. It shouldn't be lost on anybody. There probably are some reasonably smart people that work at JP Morgan. And given that that's the case, they're smart enough to know what, we talked about a couple of months ago, that in terms of total customers, they're falling behind. So how do they play catch up? The way that they play catch up is they use their capital. They use different versions of their capital to catch up, to do partnerships, to use their brand equity, their name equity, to use even
you
equity.
Can earn market share, or you can buy market share, right. And they're just buying market share, right? They just gobble it up.
Absolutely. So, you can get, as we started this show, you can get bored with Bitcoin at times. But we're in a space right now with crypto overall as an asset class. It's impossible for you to get bored with it. It's impossible. There are things that are happening constantly, every single day with this asset class that are extraordinary, that are huge announcements.
Well, what if I told you 6 months ago, or let's go back even further, a year and a half ago, Andrew and Chris, if I said to you, hey, there's going to be a crypto number 88 on the crypto market cap list that's going to be being announced by 4 publicly traded companies as managing their treasury. Like you don't have to stop at the top 50. There are real world utility applications being integrated and adopted by institutions, by banks, by Wall Street, down to projects that you and I have never heard of before. How can you call that boring? You know what I mean? There's so much potential there. It only takes one major success story with some of these, like Numerai, like HBAR, like Link, where, a huge company takes it and like XRP and Ripple, and there's all this real world utility that's coming out. It's amazing. And, it's just, you'd never believe it if I told you that a year and a half ago, not even close. And I think a year and a half from now, it's going to probably be mainstay. I don't think I would go on record saying that I believe the traditional IPO route is 100% dead at this point. I think everything will be integrated into a crypto exchange offering that has some stable coin payment, tokenization functionality, because it's already happening. We've already seen 5 or 6 companies do that.
You can already happening. Just go spend some time on the PayPal app. They're integrating that stuff as fast as they possibly can.
Yep.
Being able to buy and sell crypto, being able to move crypto off of PayPal into a separate wallet, being able to accept crypto as payment. They opened up their own stable coin. They're trying to onboard this stuff as quickly as possible. Again, because they know that there are oceans of customers that are using other products and other exchanges that they want to get their hands on. And if they don't get their hands on it from an innovation standpoint, they'll be dead. 2 years.
If their competitor gets their hands on it and they don't, it's going to be a quick death. It'll be a blockbuster type death where, I think Netflix called Blockbuster at one point in that, life cycle event. And they said, hey, let's partner We'll put Blockbuster next to Netflix. We'll come up with some stupid co-branded name, Blockflix. And they really wanted to do it because Netflix was the new kid in town, and they didn't know how they were going to put this behemoth out of business. And so they came in with an offering and said, let's partner. Blockbuster laughed them out of the room. And what happened a year later? Blockbuster is gone, So I think that if you're a legacy company and you've been making money like Blockbuster was for a long period of time, it's hard to envision an extinction event for yourself. But technology is the one thing that can do it, right? Cars, horse and buggies, like one's going back.
Think about this. Think about this. Netflix attempted to sell to Blockbuster in the year 2000 for $50 million. $50 million, guys. So let's take 12 seconds. What is Netflix current valuation? Their current valuation is what? I don't know. Give me a chart here. Let's just call it, their market cap currently is $500 billion. Right, 520, 535, depending on.
Well, they did it to the movie theaters, right? Along with COVID, the technology has a funny way of herding the cattle into specific chutes in very short periods of time. And crypto, now that regulation is endorsing it, supporting it, funding it, all of the above, that's Katie bar the door is all I gotta say. And Bitcoin is at the center of it. You're not going to have a universe where all the altcoins go up without Bitcoin reciprocating that. There's just no way, because it has the biggest use case of all of them because it's world collateral. Like literally the entire banking system will see part of their balance sheet represented in Bitcoin going forward. That's just an inevitable.
Mm-hmm.
So there you go. But yeah, no, and I keep thinking, I do a lot of thinking nowadays. Not that maybe I didn't think a whole lot before, but I do a lot more nowadays. When I look at this, especially where we look at what is this whole coming together of everything, right? We have so much significant technological advances happening right now. And over the last 10 years, we had Bitcoin coming up in cryptos, we have AI, and AI just exponentially keeps increasing. You got the, which then leads, of course, to, your Bitcoin mining versus your AI centers, data centers. And then you're looking, okay, so now we need more energy. And I mean, it's just, I don't think that people really kind of grasp just how quickly this change that we have here is going on at the moment. I think they kind of look there and they go, well, yeah, okay, well, this is happening, but they don't really see that. I just think
I don't think they understand
5, 10 years from now, it's going to be so much different.
Well, I don't think they understand a principle that they should study, which is called the network effect. Bitcoin is the largest network that man's ever built. It will continue to expand. That is how the code is written. And so when you are looking at all the most successful and valuable companies on the earth, what are they? They're just a form of a network. And Bitcoin, whether you own it in its outright form, whether you like it and you're thinking about buying it, if it's in your consciousness, it's achieved its goal, because over time that leads to inevitable integration. And so you just have to look at it for what it is and know that there's a lot of smart people that are leading the way now. You don't have to trust the man down by the river that's telling you Bitcoin is going to be the next big thing. Just go tune into any of the TradFi networks, and that's the only thing that they talk about these days is the exciting innovation that's taking place in our industry, because it is, the most successful ETF launch by far in the history of ETF launches. And even XRP's ETF launch is probably going to outperform, so it's just the amount of demand. If you just think about not only where the boomers' money is going to go, it's going to go to all of us. It's going to trickle from the boomer generation into people that at the very least have this in their consciousness. At the very most, the younger you get, the more they look at this industry as being the real industry, because they feel like they own a piece of it and that they've contributed to it. And when you have that ownership, and when you have something that supports the thesis that you're smart, you tend to give it all that you have and be a part of it and be a proud participant in it. So, Bitcoin to the moon, Moon Boy, here to tell you, the dip.
Signing off.
Moon Boy signing off at 109 or 112 or wherever we are. I don't care. Keep it coming. Yeah. I hope it dips to 95. I'll be buying there. If it dips to 75, I'll be buying there, and just keep stacking it up.
There you go. Appreciate you guys joining in as always, and everybody else listening in. Hopefully we've been entertaining enough.
I think next week we should do a special for the show. We should make it just an ASMR Beards and Bitcoin. Can we do that?
And what's the noise going to be?
Just us chewing.
I don't think no, that's a horrible idea, man. We should get microphones and just stick it in our beard and just rustle it. That would be true to form, right there.
Hey, as long as we don't have to talk about Kelsey and Swift getting married, I'm good. All right.
Who are they?
I'm really surprised Parrish didn't say something about this today.
Who are they? Oh, Kelsey and Taylor.
I have a sizable pair of balls, so you'll never hear me talk about that. Okay.
Thank God, because I saw a clip online of some male teacher in college saying, "Hey, listen, they just got engaged, and I can't focus today, so no class."
Let's think about this Swifty essay. Yep, fits on a license plate. That's it.
No, no way.
Yeah, we're getting Andrew a vanity plate that's representing his true love.
Hey, you guys like to make bets. I think that needs to be a bet you guys make coming up.
We do have a bet going. We have a bet going.
But a better one. Isn't this a better one?
There's a lot. I have a list. Okay, that definitely has made it on the list. It's not the highest on the list, but it definitely has made it on the list. So
Andrew's starting to freak out over there now. You can see it.
No, my internet is kind of in and out, so I didn't hear the last 15 seconds of what was said.
He says you're screwed.
Yeah, don't tell him. He's gonna have to go watch the stream to figure it out. Another view we'll get.
There we go. Hey, listen, appreciate y'all joining in. Appreciate everybody else joining in. Don't forget, check us out, guys. Head over to archpublic.com, or you can follow their company there at TryArchPublic on X. Follow me at TXWest Capital. You can check us out at members.texaswestcapital.com. You can grab a hold of that promo code. It's listed on that page. If it's still working, it's for the year program. If it works, we've still got a space there. If not, well, you missed, but still definitely worth it. Other than that, follow these guys, give them a hard time. Tillman really wants 50,000 followers. He wants to be able to say, Andrew, look, I got more followers than you, dude.
Listen, if that was the objective, I would just go buy them. $1,000 giveaway, XRP giveaway. That's easy. I know how the games will play.
XRP giveaway, the whole XRP army follow.
Yeah. If you like and retweet this, I'm going to give away $500. You do that for enough time, and you just have this cesspool of, people that are only looking for the next raffle ticket they get.
Yeah, exactly. They don't care what you're doing, right?
Remember, the only thing that you can control
is how much you lose. Don't forget. Don't let these guys brainwash you guys. It's the only thing you have control in the markets. It's the only. But
I have control over how many lottery tickets I buy, don't I?
I said in the market. I did. Okay. I did say in the market this time.
What about brokerage firms? Do I have control over which brokerage firm do I use and how many? No. How much? Oh, I have no control over that either.
No,
okay.
No.
All right.
Depends on what you want to trade, right?
You make trading sound fun.
Hey, trading's fun. I love it. It's done well for me. I hope it does well for everybody else. All right.
Listen,
out of here. We're out of here.
Don't end it with the only thing you can.
It's done. We're out of here.
It's his signature. It's his signature sign off. It's like George Costanza when he learns you got to end on a high note and telling a joke. All right, I'm out of here. I'm out of here.
That's it. It's done. All right, guys. Hey, I look forward to seeing you guys next week. All right, everybody else, take care as well. Guys, do me a favor. Follow these guys. If you're not doing it already, seriously, follow them. Check out their software, guys. Do you guys, real quick here, do you guys still have the promo thing going on?
Yeah, until the end of this month.
To the end of this month.
We're in the last 2 or 3 days of it. 40% discounts across all of our concierge program tiers. So, and
if you tried before and you weren't because you were in Canada or you didn't want the Gemini exchange or something, they've expanded, guys. They're in Canada. You can do Kraken exchange,
Kraken, Coinbase, and soon to be Robinhood. So come up. By the time you get everything set up, you can basically pick whichever one you want.
There you go. All right. Hey, you guys take care. We'll see you next week. Thanks a lot, everybody, for joining in. Risk management. That's where it's at.
He can't even do it, Andrew. He's dying. It's like he's over there. He's gonna get off camera and like get in a corner and stuck in a shirt.
You got videos coming your way, man. Take care, everybody.